Hi, everyone. Welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Last week on the show, we focused on scanning for earnings trades, where we found and submitted a trade for PANW. So today we'll go over how that trade went, and we'll also talk about the 3 different ways to access the unique capabilities of the ORATS backtester in our dashboard. Matt, if you're ready, do you want to share your screen and take us through?
Yeah, cool. Nice to be back. This is fun to have a venue where we can find some trades and be able to share how we're doing with them. So yeah, as Tyler said, kind of our format here is we want to go over the last week's trades or any trades we have open, and then find a new way to find trades, largely using our tool here. So yeah, PANW is Palo Networks. And we found a trade by going into our option scanner, and we had an earnings trade where we have these templates that you could use, and they can interact with our stock scanner, and our stock scanner basically finds the trades for companies coming up, and then it finds some ways to play it short. So we think that the movement in the market is implied is too high. So using a short put spread, a short call spread, a calendar, you could take advantage of that. So we set these up. We did this last week, and one of the trades that came up was Palo Alto. So we're going to go over how that trade did. So to do that, it's already expired. So we're going to go to the trade history. I'll show you how to set this up. So we're going to go to PANW. So that's Palo Alto Networks. We're in trade history. We did a put calendar spread. So we're going to add an option leg. It was puts, so we're going to do puts. We sold one. We sold the near term, which was let's go back to the 17th now, because if you go back to a certain date in history, then it'll show you the strikes that you had then. So now we could see the 17th. So we sold that put. It was a 255, and we bought the 255. And we did it for 72 cents. So let's go back a week from the 17th. And so if you look at now, we can see this is the particular strategy, and you can see where the price was. That's every minute. So last week was the 13th, so we did it. We bought it. Looks like the high of the day almost. So even buying at the high of the day, so we held on to it, and then earnings came, and then the stock rallied up, and we ended up getting out for what was it, $2.05, 185% profit. So I got one of the things that you could do on the system is to set an alert. So I have the alert. That's what I'm referring to right now, and it came up.
Yeah, go ahead. This tab is pretty neat because you can. What you're doing here, Matt, is you're basically going back in time with a trade and you can do this for any date and any trade that you can find on the options chain. You can click on any expiration or strike, and you can basically just see how the trade did. And this is on a minute by minute basis, so you can see how the price changed every minute. So this is a really neat way to look at how different factors may have affected your trade. So like different Greeks, you can see at the bottom there, we have the mid implied volatility of the trade, and you can see it dropped really heavily there. Yeah, right there. And that, might have contributed to that trade price.
Right. Yeah, no, this is great. So it's really neat. You could not only do this for historical trades, like for our back-tested trades, but you can do it for current trades and see how it's performed. So we'll get into that a little bit. So that was last week's. That was finding an earnings trade, and that video is up, so you could go check that out. But now we want to show you how to find a trade using our backtester. And so our backtester, we've been doing this for a number of years now. So if you click on backtester, this is our dashboard front end. I'm going to show you 3 ways to use the backtester. So one is you could create a custom backtest. If you're doing something like you want to create different technical indicators, or you could even plug in your own entry dates and exit dates. So this is really a customized backtest, is one way. The second way is what you're looking at now, is just our pre-canned strategies. So as you can see, we have 65.8 million backtests at your fingertips here. So I happen to be on IWM, Iron Condor, but there's a lot of other symbols here, and there's a lot of other strategies that you could check out. So if you know a symbol and a strategy, this is a good place to come. And the third way,
yeah, go ahead, John. 60 million, can you expand on that a little bit? I mean, that's a lot of back tests, right?
So the way that we get to 60 million is that we do many different days to expiration. We do many different deltas. We do how much you paid for a particular spread as a percentage of stock. We've done entry criteria. So we only will test this particular one if the VIX is low or if the RSI is overbought. And we have entry and exit triggers. So if you multiply all these together, that's how you get the 65 million. Is that what you're talking about, Tyler?
Yeah, I mean, if you think about you have days to expiration, strikes, spread over stock, and then we have 5 different types of entry triggers that we test, and then obviously stop losses and profit targets. So if you combine all of those together for every strategy and all the 50 symbols that we've tested it on, you're going to get quite a few back tests. And so we've stored all of these back tests in a database that, using this interface, you can filter through and search and rank them and do all these powerful things on back tests really quickly. Instead of building them yourself, you can look through and find them in this table.
Yeah.
It's really powerful.
Yeah, good point. So, there are filters that, it's filtering it out right now, but there are filters that you could use, and then you could, sort for Sharpe ratios and best annual returns, worst months, best months, and there are ways to sort through them. So this is the second way. So the first way is the custom, second way is the table. The third way is this trade idea. So what we put this together because, we have so many symbols now that we want to find the best one, the best strategies for the current environment that we're in right now. So this is what that's showing, and that's very powerful. So, for example, where the strategy for the environment. So the environment would be something like what level is the VIX right now? What is the RSI, overbought or oversold? What is the moving average, the 50-day versus the 200? So those are just a few of the environmental factors that we backtest under. So we would only get into a certain strategy if it's under those particular entry criteria, we call it. What I like to do is I like to go in, and I'm going to make this a little bit smaller because here are the entry triggers for now. So in SPY, here's a long put calendar with the RSI only tested when the RSI is overbought, like it is now, and the IV percentile is low. So so that's a decent looking strategy. Is this a strategy I want to look at? Yeah, it's a diagonal, so it's a calendar, but it's really a diagonal. So then I could look at, is this something I want to do? It's a high probability of profit. It's about a month out. Risk reward, so it's 1 to 5. So that's a pretty, so it's somewhat risky versus what you get. The margin return is pretty low, 7%. the notional return, which is your returns divided by stock price is low. So I might pass on that one. So I might continue to look. So one of the things I like to look at is I want to see a couple of entry triggers that are important, what I think are important in the market right now. Like, like I like this one, the stock is above the 50-day and the IB percentile is low. It's about a month out. Here's another calendar. The margin return again is pretty low. So let's continue to look on. Here's an iron condor, but this one only tests when the slope is low. The skew isn't that important for an iron condor. So I'd continue to look on. Again, I want to see two. There's a slope. I don't care about that. Here's one. Here's another put calendar with a good. So, okay, this one looks pretty good to me. So this has when the stock price is above the 200-day and the IB percentile is low is when this was tested. And the notional returns about 1%, but the margin return is pretty good. And the risk reward is, it's not too risky. So I like that. It's kind of a low probability of profit. So, we like to win on this channel, but let's take a look at this. So we're only part of
these trades are back tested, and our trade ideas actually come from the backtester. You can, and Matt's about to click on it, you can see the backtest results for each trade, which is really neat. It's you're not just seeing a trade idea, based on how we value the probability of profit or things like that. You're seeing it based on the margin and notional returns of its historical performance for this current environment.
Right. So Tyler's referring to a lot of the performance metrics, and now there's a lot more. We put a few of the summarized data up there, but we have Sharpe ratio, Sortino's, volatility, the worst month, best month, and the win rate. Again, I said it wasn't that high of a win rate. Time in the market, it's kind of low because it only does it under these time factors. So you could have a look at all those features, and then you could look at, this is kind of a hedge fund, what they look at. So this is every month and how it did. So this looks pretty good to me, like not too much volatility. The drawdowns very low. So, I kind of like this trade. So now we could look at all the trade log. So you can tell they're not making that much on each trade, but it's fairly consistent. So here's the profit. I'm just picking a trade in January of this year. So they bought the 381 put, sold the 390 put when the stock was at 403. And the stock went from 403 and they exited on February 6th. So just a couple of weeks, and it went to 409. And so they were slightly profitable on that particular trade. You could, you could look in the trade history on any one of these trades. So that was 1735. So I'm just kind of scrolling through. I want to see a lot of green, which I'm seeing. So I like this trade. So
could you zoom in a little bit so we can see the trade log a little better? Thank you. Yeah.
Yeah. So again, you could jump quickly to, different months or different years or whatever. You could see those trades. So the next step that I like to do, and I think it's a responsible thing, is to look at similar backtests, because we could have overfit this. There's a lot of moving parts. There's a lot of filters that we have. So let's find some similar backtests, make sure we're not overfitting. So we've made it easy. So if you find similar backtests, now we're going to go to our big database, and now we've kind of filtered it down to our strategy here. Now we want to start loosening some of these criteria. So we have a low spread to stock. So let's just show all of those. We have entry triggers. Let's show all of them. If we click on this, it shows all of the ones today. So not just the one that we've looked at, but all today. So now I'm starting to get more tests in here. I'm going to want to look through these when I'm done with this. So we didn't have any exit triggers on this. I can show all of them. And you can see how I don't like to use stop losses on calendar. So I'm not going to do that. I'll do none on the stop losses, but The
Why
profit
do you not
targets.
like to use stop losses on calendars, Matt?
Because generally you're not paying that much and you don't want to get stopped out. And you want to give yourself a chance to get back to it. So if you recall from the trade log, you're paying 20 cents. You don't want to get stopped out if it goes down 5 cents, with the 25 cents loss. Now what we've done is we have 100 tests now that are similar to the one. So now we want to look. I like to look at scroll through and look at the worst ones. So whereas it's ascending, I like to look at it descendingly. And now we're going to look for the worst one. So there are a few of them that do lose money. So let's see why. So here's ones that they're getting out a little bit early. So they have pretty tight profit targets. So what this is telling me is I don't want to do that. And what also I'm noticing is the losers in this particular strategy are trading and paying a high price for this. So I don't want to pay a high price. And of course, if you recall, one of our filters is paying a low price. So now I'm getting a little bit more confident because these losses are small. It's a strategy that I wouldn't do. So maybe we'll just go through and not do a profit target. And we'll look through. So now there's only one really bad trade. So this kind of lost money, because they're again paying a high price. So I don't want to do that. So I'm actually feeling good about this strategy because even if it's the worst ones aren't that bad. So I like the strategy. So I'm going to, again, short ascending and find our strategy that we had. And now let's go look for some options for it. So I like this. I've looked at similar tests. I'm comfortable with the drawdowns. So now I'm ready to put on a trade. So easy as that. Now we go to our scanner. It just jumped over. It fed in all of the data that we're looking for, including how much we want to pay for it. And then voila, here are the trades that fit the criteria. So another thing that you can do here is now, okay, so it wants to do this particular trade. So there's a number of those. We could look at the weightings and see what type of weightings that we would use. So a D percentage is our distribution. I'll show you what that means in a second. F is our forecast. So I kind of like looking at the forecast. S is our smooth. The smooth is going to be pretty minuscule because that's only for wider markets generally. DTC is if you have a high delta, it gives you control how much it costs to control the delta. That isn't that important for this particular trade. There's not much delta here. Reward to risk and probability profit, those are important. So I like our ratings here. And so now we have the 442, 438. So let's click on this and see what the payoff picture looks like. So again, we're seeing a long put diagonal. We're seeing the price is 49 cents in the market. It's 48 at 50. The theoretical value is 48. So I like to see that pretty close. And then I like to scroll down and see this payoff picture. Now this payoff picture is cool because not only is it just a typical payoff picture for a calendar. So calendars will look like this. It looks like kind of a tent. And if you end up at the short strike, that's usually the best place on the calendar. But we've overlaid it on top of it, that distribution. So here's that distribution of historical returns from the SPY. And one of the things that we do for a distribution theoretical value is every one of these distributions will take a theoretical value and then multiply it by the probability, and that gives us an expected value. So that's how we would do an expected value. So this trade looks pretty good.
That distribution, Matt, is the same value that we're showing in the scanner table that you can sort based on your ranking. And so if you like to value the trade based on the distribution percentage, you can rank that higher in the option scanner table. Same thing goes for our forecast volatility and our smooth percentage.
Right. So so this trade looks pretty good to me. I could send it to my Tradier account, but I don't want to front run. So I'm going to go to our paper trading. So there's our paper trading here. So now you can see it switched to our paper trading account here. I'm just going to pay the offer. It's only one cent more. I'll do a. I like to look at how much I lose. It's less than $1,000, so pretty zoomed in. So there, I'm comfortable with the 4 lot. So now I'll review this order and send it off. Goes to our working orders. Orders was placed successfully. You may have heard that. Have you heard the sounds that we have now, Tyler?
Yeah. So you know when it fills. It filled
Exactly.
pretty quickly there.
Yeah. So fills, and now it's in my position. Again, so now I have my long put diagonal, and we're saying a lot of things about it. Here's our edges. Here's actually, these are kind of interesting. This is what it was yesterday versus today and why it's changed. And then, so again, what I like to do now is
you can add alerts on it, right?
Yeah,
so
I'm going to add an
like
alert.
If you want a profit target or a stop loss.
Yeah, I want to know if if we're profitable. I'm going to say about 75%. This, if this goes up, that's going to be good. And I'll say we did this on the Tradier hub.
And on our show next week, we'll go over it and see how it did.
Yeah, we could take a look. Hey, Tyler, remember you were mentioning the trade history. We could now look at that for this particular trade, and it's a little easier. I don't have to set it up; it goes automatically in.
Right, because it's already in the sidebar.
Yeah, so I'll minimize that, and we can look at where it is right now. So it was up at 56 cents, and now it's down these last 2 days, 49 cents. I could go back a week. I could go back 2 weeks. See how this is. See how this trade performed over the last couple of weeks. So it's pretty stable. So again, we'll see, that has a lot to do with the back test. It was a pretty stable trade, not a huge drawdown, and so now we're in, and we'll be tracking this trade for the show, for the channel, and we'll go back and look at the paper trading and see how this trade performed.
Matt, do you want to go back to the backtester really quick?
Sure.
I want to go over a few more things. So it's a really powerful tool, the table. Yeah, the backtester. Yeah.
So I'm going to clear these filters.
Yeah, go ahead and clear the filters. That'll just jump back to normal settings, or you're seeing pretty much every long put calendar for SPY. So what I wanted to note here is the ranking. So it's showing we have over 10 million backtests just for a SPY long put calendar, which is crazy. You can rank those by best return on risk or best annual return, and there's a few other ones. Matt, if you want to click the drop down.
Yeah, firstly, what I like to do first is the time in the market. So you want to filter out these. This is only less than 1% of the time. So I like to put like 40% of the time there. This is like, it's looking for stock. It's looking for days when the stock price is above the 50-day, but the RSI is oversold, which never happened. So if you put in 40%, then it's going to sort those out. So that's always the first thing that I do. And there's a lot of other filters that you could put in to identify backtests that you want. Okay, so I'm sorry, Tyler, what do you want me to do?
Oh, no, that's good. There's a lot of filters that you could use. Time in the market's one of them. I was going to look at the ranking real quick. So we rank by best return on risk by default, but we can change that to rank on other metrics, and we also combine the different metrics. We have 3, right, Matt? So if you could,
yeah. So you're right. So this is cool. This is actually my favorite. So if you could read it in the white writing on the black, it calculates the P&L per day divided by the worst monthly return. So we want to factor in the worst annual return and the max drawdown. So those are all the bad things that could happen. It's kind of like a Calamar ratio. That's the return divided by the drawdown. So, but we actually put in the worst month and the worst annual month. So I really like this way to look at it and way to identify, the best trades. So it's identifying this particular trade right now. So if I were to change that, you could sort on, overall performance, which is just the annual return and Sharp and P&L per day, Sortino averaged, or you could actually go down to the Sharp ratio, click on that, and it'll sort from top to bottom. Or you could look at just margin returns. So there's a lot of things. So that, and it picks up things. Now, one of the things I do is if you wouldn't want to trade something that long term, you could just say, well, my max days to expiration on this, might be 50. So I want to see anything below that, and then it'll go in and find that. And you can really narrow down on trades that you would do and try to find the best ones. Again, if you're overfitting though, then you want to go do that where you look at similar back tests and see the worst ones and see the best ones and see why they've traded that way, and really get comfortable and make sure you're not overfitting a particular back test.
Well, that's what you were doing earlier.
Right.
You were showing us the find similar and seeing how the worst ones did. And so if the worst ones aren't really that bad, then, maybe that's a good one to consider.
Right.
Yeah, I think that was a good overview, Matt. We have the backtest finder, we have the custom backtester, and then we have the trade ideas, which the trade ideas are fed our backtest data and then sorted based on best return on risk, and then you can see all of them in one table and then do your analysis from there. So, yeah, backtesting, it's a great tool for everyone to have. We incorporate it heavily into most of our tools on the dashboard. So you have lots of historical data at your fingertips. I think that's going to be all for this week, Matt, unless you have anything else.
Yeah, I just want to add to that. I mean, it's actually quite amazing. When I've been in this market as a market maker and a trader for a long time, and we had to do a lot of this by hand. And now this should blow your mind. I mean, it's so difficult to backtest, and we've just been improving. And now with all these, like I said, we've showed today 3 different ways to really get at backtesting. It's a pretty amazing product. So yeah, check it out at ORATS.com. It's reasonably priced and it's very powerful. I think it's a really good way to identify trades, Tyler.
All right. Thank you, Matt. And thank you, Tradier, for hosting us on your show. And we'll see you guys next week.
Thanks, guys.